This call is for you. And if you've been here for a while, that's fine because this will really help out. 1 month, about a week, 9 months, going on 3 months, old enough, 2 months. Okay, we got a lot of new people in here. So yeah, like I said, so when you go into Forex trading, I know a lot of you probably gone through the university or, Market Pro and you've been doing your thing. So this is kind of to help you utilize our system because if you learn how to trade some charts and all the technicals and all that stuff, it's good. I want to teach you fundamentals of taking alerts because our system does provide a lot of alerts. If you're brand new to the team, we send out trade alerts in the investment market so that you can make smarter decisions so that people do the work for you. You pretty much have professionals working at your disposal. They are doing all the work for you so that you can make better decisions through the investment market. So I'm going to share my screen now. We're going to finally get into it. And let me know if y'all can see what we got going on. Let's see. Okay. It should be good. So I'm actually doing slides just to make this a little bit easier, but they're very basic slides. I just want to show you guys what's up. We're going to go into some things in depth of what you should be keeping in mind as you go through alert taking. Okay. So if you're not taking notes, take notes. We hear all the time, note takers are money makers. If you want to really excel in anything, you got to make sure that you retain the information the right way. And I really want to make sure, because let's be honest, I'm going to be transparent with you on this call. When it comes to investing, there are going to be losses. Of course there are. Just like in life, not everything is sunshine and rainbows. So when it comes to trading, you have to know the most successful traders I know that have six-figure accounts, multi-six-figure accounts, million-dollar accounts in investing, whether it's Forex, crypto, NFTs, whatever the case is, what they've learned the most are from their failures, right? Their failures really make them the best investors and the best traders that they can become. And that's one of the key principles when it comes to investing long term, is understanding that this is a long term game. You're not here to get rich quick. If you have $100 to your name, $200 to your name, $500 to your name, that is not going to make you rich or wealthy right away. You got to learn how to invest in yourself. So taking a chance on this platform was the right way to spend $300, $99, $600, $1,500, because the best investment you can make is in yourself. Yes or yes, right? So if we're taking advantage of that, and now you're learning how to get into the markets, then of course you're going to be set up to win, because we breed winners, right? We breed champions. We want to win. We want to make sure that we're doing as best as we can to go into these markets and really make some money. So the first thing that we're going to go into, which I really wanted to focus on, because it's gonna really dive into other things that will carry over to all the markets. I personally started, for those of you that don't know who I am, my name is Christian Perez. I've been in this platform for almost 4 years now. And yeah, it's been a long time. And I remember I started off in this platform learning Forex. I was the broke college kid at 20 years old, looking to make multiple streams of income. I had no idea how, no previous experience in investing, none of that. And what I wanted to do was find a way to make money with putting as little time possible. Did I want get rich quick? No, because I understood that wasn't real. But I wanted to get paid for my efforts, and I didn't want to have to work a job for the rest of my life. So I'm like, okay, well, let's dive into investing, right? I don't have a lot of money. So if I looked back then, I would have probably taken a different path, which is why I'm here, to make sure that you don't make the same mistakes I did. Okay, so I'm saving you a lot of time. And when it comes to trading, I realized that Forex and the principles in Forex apply to crypto, and they also apply to the stock market. Technical analysis, analyzing charts, placing trades is very much the same for all of them. So what we're going to go into today is the foreign exchange market. What is the foreign exchange market? Foreign exchange market, which is Forex, is the trading of global currencies. So what some of y'all said, you're from Mauritius, which I know you have the rupees. Some people are in, so France, you're dealing with the euro. In Canada, you're dealing with the Canadian dollar, which is where I'm from. And in the US, you're dealing with the US dollar. So that's four of many, many currencies that exist today, right? Can we agree? There's a lot of currencies. If you travel, you have to trade your currency for one other currency. So whether you like it or not, you've been involved in the Forex market for a long time. So the question is, how can I make money off this market? I don't know if you've seen through the person that invited you to this call, the person that got you started, or through an opportunity presentation, the banks are using this market to make billions of dollars every single quarter. That's what they're doing. And so if I learn how to get a little piece of that pie, then I can be profitable. But how do they do it? They have experts doing this for them, right? Do we understand that? The banks have experts doing this for them, which is generating them billions of dollars every quarter. What does iGenius provide, and what does this community provide? We have experts that do all the work for you and give you the resources and tools that you need to invest the right way. So we have what the banks have, but we're giving it to the average person, the retail trader. Okay, if you're someone who joined for entrepreneurship, business, affiliate marketing, stuff like that, those are for our builders calls. Those are Saturdays, but every Tuesday at 3 p.m. we have our trading Champions University call. So we're going to go into the next slide, which is the fundamentals of alerts. And this is what you're going to be learning today. So if you've ever wanted to dive into investing before, it's as simple as just entering copying and pasting some notifications on your phone into another app. Okay, so I didn't write this down, but I should have. You got to make sure that you have Telegram downloaded, obviously, which I'm guessing you do because you're on this call and you found the link somehow. And you want to make sure that you have MetaTrader 4 downloaded on your phone. Okay, so we're actually uploading a new Forex tutorial on the launch site that I just recorded yesterday. That will be on the readytolaunch.business website very soon. But as far as fundamentals go, we're going to go over some of the key steps that I say every beginner investor needs to go into when they're trading for the first time. Okay, so step number 1 is identifying the currency pair that you have to look at. So what am I going to look at in terms of currency pair? So if I go and switch the share over to, let's say, our alert channels, what I will find very quickly over here is, let's say I go to, let's not do that, let's do theta. If I go to theta up here, which is one of our Forex channels, let's just go to this example that they sent today, which, by the way, we already won. They sent it at 9:37 a.m. and we won at 10:47 a.m. So that was a quick trade. But in this case, we're seeing the euro and the Japanese yen. Can you all see that? Drop a 1 in the chat if you can see what I'm seeing. Euro, Japanese yen. That's a currency pair. So if you're wondering what we've been trading in the markets, you're dealing with assets, right? Assets, currency pairs. In stocks, are you dealing with a currency pair? No, because stocks is just simply the stock itself. But in Forex and crypto, which I'm going to show you crypto in a second, you're dealing with one currency paired against the other. Okay, and they actually send you a chart of what this looks like. Another example would be this, the New Zealand dollar versus the Japanese yen. Now, if we go to a prettier looking alert channel, I like LDS. And this is, let's see, I was doing the example with the euro and the USD yesterday. And this, you can see, the pair is euro USD. So you see, there's always going to be a combination of two currencies when it comes to the Forex market. You're not dealing with just one. I am not just buying the euro, right? It's paired against the US dollar. So how those two currencies fluctuate on a daily basis is going to affect the market, right? Now, if I go into trading view, you can see on the right side, y'all see that? The Aussie and all the Aussie pairs. So you can see that's against the Japanese yen, it's against the Canadian dollar, it's against the Swiss franc, and that's against, I guess, the New Zealand, the Kiwi, right? The Kiwi dollar, and then the US dollar. So like these are different currency pairs that you can take into account. Also with crypto, you're dealing with something very similar. These are assets on coinmarketcap.com. By the way, if you've ever wanted to learn about crypto, coinmarketcap.com ranks all the crypto. It shows you what their daily volume is over 24 hours and how much they've gone up, what the trends are. Bitcoin, Ethereum, Tether, USDC, BNB, Binance, and a lot of you probably heard of, Ripple, Cardano. These are popular. Solana, Dogecoin, which is Elon Musk's favorite. These are always paired off against another currency. So let's say I'm in the US, okay, and I want to buy Bitcoin. What I'm going to be buying is Bitcoin versus the US dollar, right? That's usually how it's going to work. This is not Forex, this is crypto, but it's still currency trading. So it'll be Bitcoin against the US dollar, which is what I buy. I'm in Canada, but I still buy Bitcoin against the US dollar because I'm trading on American exchanges. Ethereum against the US dollar, same thing. So if I buy $1 worth of Bitcoin, I don't need to buy one Bitcoin. That's the key difference. I'm not buying one Bitcoin. I'm buying $1 of Bitcoin, let's say. That'll get me 0.00000 amount of Bitcoin, but I can still buy different units based on my currency. Okay, does that make sense? So that's kind of the example I wanted to look at. Is the first thing in alert taking that you're always going to look at. It has to do with the currency pair. When I trade, I have to identify what exactly I'm working with. Okay, now if I go to Telegram, let's go to Telegram again. And I look at, let's say above this was gold, the XAU USD. If I keep going up here, a lot of gold trades. Bitcoin, here's a good example, Bitcoin USD. And Forex, we could also trade crypto. See Bitcoin against the US dollar. These are different examples that we can look at. So let's go back to the presentation slides. and we'll go into the second point. So now that you've identified the currency pair, we're going to go into the order type. So, okay, cool. I have the currency pair, but what exactly am I going to be doing with that? Am I buying or selling? Team, how do I know if I'm buying or selling in real life? In real life, if I want to learn that, I have to go to the charts. I have to do my analysis. I have to see what direction the market's headed. I have to do all the work for hours a day just to enter like 5 trades. The beauty of what we have is we have the alerts that are sent to you, and they actually tell you what to do. So I'm going to show you an example of different order types that we have. But overall, there's really only 2 things you're going to have to focus on, which is going to be, let's see over here, share that. You can see it's buying or selling, right? Buying, 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 right? All that good stuff. Let me just turn off this mouse because it's glitching. You'll see my floating arrow. That was crazy. So you're gonna see all these orders: sell, sell, buy, buy, sell. They're gonna tell you, so you don't have to do any of the work. They're telling you exactly what you need to do. So in most cases, by the way, when you trade on your phone on MetaTrader, you're going to see that there's like 5 different order types. It's market execution, buy limit, sell limit, buy stop, sell stop. If that sounds like gibberish to you, then don't worry about that right now. Go into the university and learn this for yourself. But all you have to understand is that there's 1 or 2 options in the market. You could either buy or you can sell. You can't just, there's nothing really else you can do. And so if I know that I'm buying or selling, then it makes my life a lot easier, right? Because I just choose the direction that the market's headed. But if you did want to learn how we place different orders, this is actually what you'd look at. These are the 4 different types of orders. We have buy stops, we have sell stops, we have buy limits, and we have sell limits. Instant execution or market execution isn't here. By the way, what does that mean? All this stuff I'm saying. Execution, market execution, instant execution, all that means is that when you place the trade and you press buy on your phone, the trade becomes active that second. That second that I press buy, it's like one of those memes, you know, when they press the button on the keyboard and then the market goes up or the market goes down. That's what an execution trade is. If I go to these ones, these are not entered right away. These are order types that I would place and they become active when they hit the target that I want. Okay. So it's like the difference between, what's a good example? It's like setting a stopwatch versus an alarm, I guess. The clock will start ticking right away, and there will probably be a noise that it makes, right? You know, when you start a stopwatch, there's a little beep, right? Beep, like it starts. An alarm doesn't make a noise until it hits the target, which is, let's say, 15 minutes, 30 minutes, 45 minutes, an hour. That's pretty much what these trades are. These 4 trades in front of you are like the alarm, whereas an execution trade is like the stopwatch. The time starts ticking right there. Okay, and the noise happens right away. So that's the difference between these 2 types. If you don't know about these, by the way, and it seems confusing, trust me, it took me a bunch of trading calls and investing calls to really understand how this worked. But for this specific section, you can access everything in Market Pro and the university, and it'll teach you in such a really like specific way that will help a lot. But all I wanted you to learn is that there's 2 options. It's a buy or a sell. Make sense? Drop a 7 if that makes sense, and we'll move on to the next step. Okay, so first we looked into the currency pair. Now we know if we're going to buy and sell. And now we have to determine what our stop loss, take profit, and entry price is. I want to see a lot of the new people interacting because I know the newer people, I know the older people, you know, y'all get it. Y'all have seen this a few times, but I want to make sure that the new members understand. So the third point are criteria that we sent, okay? So it's like, okay, I entered the trade, but now what? How do I know when to close it, Christian? I've entered the trade. That sounds great. My alerts are, you know, clearly they're sending to me. But one of the things that a lot of people say about investing is, you know, when people pull out of the investment right before it blows up, or they don't sell and then it drops down to the earth's core, like it's bad. Like, you know, you hear those moments. So how do I know when to close it? The good thing is that you don't have to know, because we send you numbers, which are pretty much criteria of exactly what target this trade will hit. And once it hits this target, the trade's done. You don't have to worry about it. So we call this semi-automated trading. So a lot of you that probably are interested in Endotech and the elite package, the reason why people like the elite membership for investing purposes is because the trades are entered on your behalf and you don't have to close them, nothing, like it's all done for you. With the regular trade alerts that we have, you're sent the notifications, you have to enter them yourself, but they close on their own. Okay, they close on their own. So let's go to an example in the alerts. If I go back to Telegram and I go to my alerts channels, and I'm going to give you an example of a trade I entered yesterday. Let's go all the way down here. I entered this trade yesterday. I'm going to show Megan. She's never seen this. She didn't even know I was here. How much is that?
Oh, 44.
Yeah. So I made $44 off a trade yesterday, which was one trade that it took me 2 seconds to enter. And it was for the example that I was actually showing, which y'all will see. And I got a notification. So that was yesterday at 6:57 p.m. I entered it around 11 p.m. because I noticed that the entry price didn't change at all. It was the exact same entry price. And then we got a notification this morning. So I pretty much went to bed. I woke up and take profit hit. So that trade won. So these are targets that you set. I literally made money in my sleep, but that's what you can do with trading. I hate saying that because it sounds so cheesy, but it's literally what it is. So you receive a stop loss, okay? And what the stop loss number is a target on the lower end, so it pulls you out if you're in losses. Because let's just say, let me give you an example of the casino, because trading should not be gambling, but for many people it is, okay? If I'm going to the casino and I want to play blackjack, and I lose, let's say the $100 that I was going to play with, what do? Do I go into my pocket and give the dealer more money to get some more chips in? Or do I just call it quits? That decision is made for you here. Because a lot of people will go another $100. Trust me, I've been to Vegas plenty of times to see how many people really dig themselves in a hole because they don't have any risk management. So the stop loss number tells you, hey, Christian, man, you lost a little bit, so we're going to protect you. We're going to make sure you don't lose any more. I can't do anything about it. Once I enter that number, it's a given. The take profits, on the other hand, these are profit targets. So let's just say I had a nice day at the casino and I made $300 or $500 or $5,000, right? But so I want to shoot for $10,000. I want to shoot for $15,000, $20,000, for whatever reason, because I'm just really greedy as an example. Let's say that. The take profits are the points on the wins where it pulls me out automatically. Does that make sense? This is probably the best way I've ever explained it. Because when it comes to losses, you got to know when to pull out, but it does it for you. With wins, you also got to know when you got to, stop the wins, because there's a point in time where the market is in reverse on you. Some people ask, Christian, why would I pull out of a trade that I'm winning? It's because it's not going to be winning forever. The Forex market is a very fast market. The crypto market is a very fast market. The way the market moves will really hurt you if you stay in it too long. Because we're not here to hold long term. You can, that's a whole different form of investing. That's holding long-term investing. But this is trading. So this is a bit quicker. So I want to capitalize on the small movements of the market versus the big movements in the market. So over here, the take profits are designed to automatically take me out of the trade once I've won. Okay. And there's 3 options that I can pick. I would always recommend take profit 1 if you don't have a lot of time in the day to look at your phone. If you're looking at your phone all day and you understand trading to a better degree, then pick take profit 2 and 3. Okay. But for the most part, like I said, just enter take profit 1, especially as a beginner. Off take profit 1, I made $44, not too bad. If I had picked take profit 2, I would have made what, $50? It wouldn't have been that much different, but $55. But I mean, like, it's worth it for me to just not, because I'm a busy guy. We have a lot of stuff to do, and so I rather enter take profit 1 if I'm trading passively. So if you have a problem with gambling, maybe pay attention. I know indirectly I'm shooting shots at some of you that have lost way too much money in the casino. It's a good thing you signed up here, or else I don't know what would happen to you. So we're gonna go into the next phase, okay? And that is, oh, actually, before I do that, entry price. So you guys see how in the beginning it says prix d'entrée, which is a French channel, but it's entry price, right? Every channel that we have, is sometimes they'll be in different languages, right? I know Theta is actually an Arabic channel run by an Arabic trader, but they're always going to have an English translation. So entry price is the price of the currency, right, when they identified the trade. So at 6:57 p.m. yesterday, they saw that the euro US dollar was trading at 0.99430. Okay, what does that mean? That means that for every euro, 1 euro gives you 0.99 US dollars. Do you guys understand how powerful that is? For the first time in a long time, the euro is worth less than the US dollar. Can you believe that? That's what this is telling you. The euro, you know how usually we're like 1 US dollar is like $1, 130 euro? Now it's less. So we capitalized on the movement, on the uptrend, a very small movement, and we made some money. Whereas most people are freaking out because the euro is crashing. We're making money off it. Okay, so that's really indicative of like how the market's moving. Let me give you another example. Oil. This just shows the price of oil. So like 91.9. But like these entry prices. Let's move up. Actually, let's give you something. Let's go to IOTA. What are they trading nowadays? They're trading a lot of. These are risky trades. I wouldn't focus on IOTA right now. This is it will make you a lot of money, but also lose you a lot of money if you don't know what you're doing. It's a really good channel, but if you're a beginner, I'd stick with Theta and LDS. So as an example here, this is a different example. The New Zealand dollar versus the Japanese yen. It's trading at $86 or 86.20. What does that mean? It means that 1 New Zealand dollar, so the first currency, is worth 86.20 Japanese yen. That's what it means. See that? So that's why entry price is important. They give you that. You don't have to enter it in the trade, but it's just good to keep in mind to know if you're late, okay, to the trade. And like I said, we're gonna have a whole like I'm gonna upload it, entering alerts training on the Ready to Launch site. So look forward to that. So we're gonna move on to the next step. Shout out to Megan, Brandon, and Mariana for having their. Or is that Masha? Is that Masha? Oh, okay. Yeah, Megan, you don't have to whisper. It's reading the name, Masha, for having the cameras on. So shout out to you guys. I love having cameras on. And so next step we got lot size. Okay, lot size. So this is something to consider in terms of, okay, let's say I'm someone that has $100 in my trading account. I'm someone that has $500 in my trading account. I'm someone that has $2,000 in my trading account. What am I going to trade? So this would make a lot more sense if I had the MetaTrader 4 app in front of me, which I'll try to show you, but laptop quality really sucks. I thought it was my screen being dirty, but apparently, you know how they say that laptops and phones start declining after years on purpose, so you have to buy a new one from Apple? You know the schemes? Yeah, that's what's happening with this. So if I enter a trade, you see over here, there's that, it says Euro USD market execution is 0.08. It probably looks like 80.0 to you, but it's not. It's 0.08. That little white decimal number, can you see it? So that is called the lot size. The lot size is what your risk or what the broker is taking from your account to allocate to your trades. So let's just say I have $1,000 in my trading account. I'm starting, that's what I have. And I'm like, am I putting in $1,000 for every trade? No, I'm not. They're taking a small percentage of that. Okay. How they determine that is based on the allocation number, which is that decimal that you put. Okay. So now if I know that my allocation, let's say, is $1,000, then I should probably enter a specific number. Okay. I'm going to show you exactly what that looks like. So I'm going to share my screen. We're going to go back to Chrome over here. And we're going to go into, I think it was this one. Yep. Okay. So they call this the 10 pip stop loss. This is like a certain form of trading. Don't worry about that though. This is showing you that based on my capital and my lot size, $100, $200, $500, $750, $1,000, I need to enter these lot sizes. So I know that if I'm at $100, I'm going to tell you guys, I'm going to give you the answer. So if you're writing notes, write this down, okay? $100, if you have $100 in your account, your lot size should be 0.01. Okay, 0.01, nothing else. 0.01. If you have a $200 account, what your allocation or lot size is going to be is 0.02. Okay, 0.02. If I have a $500 account, my lot size is going to be 0.05. 0.05. 750 is a weird number. We're not going to get into that, but let's just say $700. If you had $700 in your account, you do 0.07. Are you guys noticing a trend? So in the hundreds of dollars, it's just 0.0 and then whatever the number is. Now, once we enter $1,000, the lot size that you want to enter is 0.10. 0.10. So if I want to enter $2,000, that's my account size. It'd be 0.20. 0.20. And if I want to enter $5,000, that's my account size, 0.50. So this is pretty much what you need to consider for your trading accounts. Does that make sense? You guys notice the trend? So if I have $10,000, it's going to be 1.0. It's going to be one lot, one standard lot, $10,000. Does that mean I'm entering all that money into one trade? No, it means that the broker is going to allocate a specific amount so that my wins and my losses work accordingly to my account size. Because the last thing I want to do, why do I not want to change these numbers? Because I know there's someone who's very curious in this call, and they're going to start entering random numbers. If you have $100 and you enter a 0.1 lot and you have a losing trade, you could lose $40. $40 on a $100 account, let's say, is not a big deal, or actually that's a big deal. $40 loss on a $1,000 account is not a big deal because 0.1 is meant for $1,000. You get what I'm saying? So they allocate in ratio to whatever your account size is. Does that make sense? Does that make sense? So the allocation is a ratio, pretty much a percentage that they take to allocate to whatever your trades are for your account size. So the more you trade, the more room you have to trade. Or sorry, the more money you have, the more room you have to trade. The less money you have, the less room you have to trade. Okay. Now we're gonna go into one of I think this is our last point, which is risk management. This is about calculating how many pips, calculating how much can I win or lose. And this is one thing that I wish I had my iPad for, but I don't, unfortunately, right now. But what I usually do in my trainings, which you can actually watch the recordings, I had a Forex training. I think it's the first video in the GC Champions channel, or YouTube channel. You can watch that. I go over risk management very in depth. But what this is telling you is that based on the account that you have, okay, so let me go back here. Did I go through all the pictures I had to go through? Oh, no, it's actually right here. Perfect. So this is telling you how much money you would win or lose based on your lot size. So we just talked about lot, right? We just talked about lot. I don't know why this is incorrect. There should be no units for dollars on the lot size. So please ignore that. The lot size has no unit of measurement. It's just 0.01. So if a $100 account, it's 0.01. If I'm a $200 account, it's 0.02, not 2 cents. It's just 0.02. $300 would be 0.03, $400 would be 0.04. Like I said, $7,000 would be 0.70, 8,000 would be 0.80. What does that mean in English? So these allocation numbers represent a certain amount of money you make per pip. Okay, and a pip is a unit of measurement that we have in Forex. So the same we have centimeters, meters, liters, cubic meters, I don't know, kilometers, like hours, seconds, units of measurement for different things. Pips are what the unit of measurement is in the Forex market. Every little pip that I catch is representative of a certain dollar. So if I have, I would actually, know what? You guys give me 3 account sizes. Give me 3, like just throw 3 fake account sizes that you want me to do an example on. So like $300, $500, $1,000, $10,000. Okay. Oh, I like that. Devin and Megan put the allocation. Okay, 0.04, which is a $400 account. 0.08, which is an $800 account. Let's get one more. Let's get someone else to drop it. 1.2. Damn. Edwin, big boss. To It's a big account. Okay, if you guys don't know, that's a $12,000 account. So we're gonna go into the three levels. So Devin's at 0.04. If I go into 0.04, that's $0.4 per pip, which is what? 40 cents, right? 40 cents a pip. So on a $400 account, let's just say, I'm gonna give you guys write this down. On average, for iGenius alerts, like the alerts that our professionals send, the take profit one is usually 20 to 30 pips. 20 to 30 pips. Usually in that range. I don't see anything bigger than that. Their take profit threes are like 100 or 200 sometimes, but their take profit one is 20 to 30 pips. So we're gonna use the example of 20 pips a day. Nothing crazy. 20 pips a day. 20 times 40 cents. Because each, let's say I hit take profit one. 20 times 40 cents is, pretty sure it's $8. Yeah, $8. So off my $400 account, off winning one trade, I'm gonna make $8. Okay, keep that in mind. If I catch 20 pips on a $400 account, so 20 pips on a $400 account, I'm gonna make $8 because it's 40 cents per pip. So 40 times 20 is $8. Now we're gonna go into the next example, which is 0.08, which is what Megan said. $800 account, bit more. We're doubling the account size. $800 is a 0.08 lot, which is $0.80 per pip, which is 80 cents. Okay, 80 cents a pip. So 0.80 times 20 is $16. So off her $800 account, she's making $16. That, guys, keep in mind that's one trade. Imagine if you're entering more than that, right? You're just doing, you're growing by addition there. So $16. Now, here's the big difference. Let's look at Edwin's account size, $12,000. That's a big boy amount. So $12 per pip. If Edwin makes 20 pips, which by the way, catching 20 pips, I hope you all know it's very easy. 20 pips is not a big target. Like 20 pips is very, very basic. $12 a pip times his how many pips? 20. He made $240, and likely to catch those 20 pips, if he's really trading fast pace, made that in 20 minutes, maybe 30 minutes, he made $240. So you see that when you have a bigger account, you have more room to trade. And when you have a bigger account, you can make more money. So understand that when you start off small, I've seen people turn their $200 accounts into $5,000 accounts very fast, but I've seen people turn their $200 account to $5,000 accounts over the course of a year. The difference is, I'm gonna stop the share so y'all can see my face because I'm being serious. If you start off with $200 and let's say you want to turn that into thousands of dollars very fast, the chances of you losing that, I will bet a lot of money. If I was a betting man, I would bet a lot of money, you'll lose that money very quick. Because how you make money is also how you lose it. If you make money the smart way, you're gonna lose money in a calculated way, very smart way. You're gonna, okay, it's little losses. If I'm gambling, I can lose my money just as fast. So I know people that have turned a $200 account into a $20,000 account. When they first started, $200, okay? And they were able to build a massive account. So my point with that is saying risk management is really important because you got to understand that wins are made over time. You're not here to get rich quick, you're here to build wealth, right? Imagine telling Warren Buffett you're entering a 1.0 lot on a $100 account. You can't even do that. Margin wouldn't even let you. Like, there's not enough space for that. But my point is don't let winning streaks blind you. Got to be very smart with this. So this information, some people will say $200 and I only made, or no, $400 and I only made $8. The hell? What's the point of that? If you enter 3 trades a day, you're adding up. At the end of the month, you're making 50 to 60% on your money. Imagine if you told people in a month at the bank you make 50 to 60% return. People would be lining up for weeks. I'm not kidding. So play the odds, right? And the last point that I have for you, my friends, is the 2 sins of trading Forex. That being number 1, trading off emotions, and number 2, being greedy. If you avoid these 2 things, you will be a very successful investor, not just a trader. You'll be a very successful investor in any market. That being crypto, stocks, Forex, binary options. I know we have the binary challenge right now. It could be NFTs as well. I've really done my best to stick to this, right? Don't get emotional. Don't get greedy. And the reason why I lost a lot of money in the beginning was because I was doing two of these things. As I started to accumulate my capital, as I increased my income, put more into investing, I developed the skill. And it's the reason why I don't even have to rely on my residual income from the business. If I wanted to, I could take a break, which I don't want to. But I could if I wanted and just rely on investments. But I believe investments are investments. I haven't pulled out of my accounts since I started. They're just collecting money there. I assume that they're gone, even though they're not. I just pretend that they don't exist. So don't get emotional with your trading. Don't let winning streaks blind you, and don't let losing streaks cloud your judgment. Because I've lost trades in a row, let it discourage me from trading the next week, and that week was really, really good, and I would have made all the money back. So don't get emotional. And greed, they say money is the root of all evil. It's not the money, it's not money itself, it's the desire for money that is really the root of all evil. Because you desire money, you're greedy for it, you're going to watch how quick money runs away from you. So that's my lesson on Forex trading. And overall, this isn't for just Forex, this applies to everything, but the specific examples I gave in the alerts are for Forex. So team, I hope you enjoyed that. That was my little lesson here. That was the first session that we have with the rebranded Champions University. I'm excited. We have the ladies group and the men's group for that. For my builders, nothing's changed. We're going to change the name of the group, but that's it. But it will be mixed in as always. But y'all know that investing is, these little steps. These are the first steps. A few years from now, when you're making a lot of money and you've accomplished a lot of your goals, you're going to think back to trainings like this. You're going to be so glad that you actually took notes. You're going to be so glad that you actually applied it. Because trust me, every day I think of the past 4 years ago in 2018 when Christian was 20 years old and broke. And I'm so glad I listened to the trainings. So team, that's pretty much it. I'll see you guys in the next one. Take care. Peace. Have an amazing rest of your day. And I'll see you on the next one.